Hi guys, good afternoon and welcome to Money Control. I'm Karunya Rao, and in our commodities chat today, the focus will be on gold prices. Joining me today is Sriram from Reliance Securities to talk about the big trends and the big triggers playing out and impacting prices at large. Sriram, thank you so much for taking time out. Let's understand what is it that the street is cautious about right now. All eyes are on US Fed Chairman Jerome Powell's speech later tonight at the Jackson Hole Symposium. But what is it that's making the market, the precious metals, a little jittery?
So thank you for having me on the show, Karunya. So as you mentioned, the markets are jittery because the Fed chair Jerome Powell is scheduled to speak tonight, and so everyone is expecting him to continue his hawkish stance. His The minutes from the U.S. Federal Reserve reflected that they are worried about inflation going forward. As you
Yeah,
know, the U.S. inflation is still remains elevated at 8.5% annually on an annual basis. So I think everyone is expecting him to remain on the hawkish side. Recent Fed speakers have already mentioned that they need to continue with their aggressive rate hikes going forward to cool inflation. So everybody is expecting him to talk about possibly a 75 basis has already been factored in, but there are
yeah.
also talks that he may only do 50 basis points. So I think markets are factoring that in, and markets are awaiting that. Apart from that, we also have the PCE price index, which is the Fed inflation gauge, the Fed favored inflation gauge. And he last time mentioned that it's going to be data dependent. So today's evening data could
Yeah.
also, move the market. So I think markets still remain cautious about that.
Okay, all right. But as you also pointed out, and like we all read in reports last time around, that the Fed was non-committal about the quantum of interest rate that they will approve in the September meeting. But they
Yeah,
did continue to hammer the point that they will drive the rates up and keep
yeah,
them there till inflation has been squeezed. So
yeah,
let's say today, if there is some more clarity or some more indication about what the quantum of the rate hike will be, which
yeah,
way will gold prices go from here on? If it's, let's say, a larger than expected rate hike, 75 bips or more, how could
yeah.
gold possibly react? And if it's lower than expected, how could gold react in that case?
So, as you have been noticing, gold has been struggling below the. If you see the international markets, it has been struggling. Domestic has been recovering because I think one of the big factors why domestic is moving up because rupee is weakening, but the international has been struggling, and it's still struggling below that 1775, 1780 below that level. And if we see a 75 basis points, yes, it will continue to struggle, possibly move back towards 1720, 1730 levels. Bigger than that will definitely weigh on the prices, possibly even 1680 is a possibility, or even more than that. But a 50 basis point and the percentage remains low of a 50 basis point, but even that 50 basis point is still slightly higher when the market is not expecting that much. So 75,
Yeah.
definitely some correction is possible. If a surprise 100, which is unlikely, may not happen, but yes, there is a possibility that 100 can also happen. That will definitely drive prices even significantly lower. But a 50, I think market will consolidate after that. I think it will be data dependent. Prices will depend on the dollar also. So I think it will consolidate if it's 50 basis points.
So, what is a key support level to watch for gold, especially if we look at it in domestic currency, the rupee? What will be
Right.
some levels to watch there?
So domestically, we see 51 300, 51 250 from an intraday perspective. After the Fed event, we see that if the Fed is aggressive, then I think 50,800 is a possibility. But if the Fed is
Okay.
not, if he indicates it's going to be a data dependent and possibly 50 basis points in September when they meet. So I think 51 300 will be a short term support for the markets. And on the upside, we see 52,000, a big resistance point for the market as of now.
Okay. If we look at other data points, I'm currently looking at China's net gold imports via Hong Kong, which jumped to a 9-month high in July. Banks were, snapping up bullion. Beijing is working to revive their economy, which was
Yeah,
hit by a resurgence in COVID cases. So, how
yeah.
big a trigger could that be as well when it comes to impact on precious metal?
So gold has always, I mean, China has always remained. I mean, after before India, it was not that much, but China has recently propped up a lot. We believe that
Hmm.
demand will remain intact. The recent stimulus measures from Chinese authorities will indeed help the economy. Uh, but their zero COVID policy is still a big concern for me. If they continue with that, then I don't think that the demand will improve significantly because they have a very strict COVID policy. So I think India will catch up in that point. India, I think the second half of the year, I think demand may improve. As we know, a lot of festival seasons are coming up and demand will prop up. The only concern there will be high prices. Prices are already at 52, almost 52 now,
Yeah,
and if the markets remains elevated, I think the demand will remain sluggish. But I think in the first half it was slightly better than expected. After a re-emergence of Omicron, the demand remained positive from our side. Gold,
right.
especially jewelry demand, improved year on year, and hopefully this will continue in the second half as well. That can support some on the demand side, but China still remains. The only concern for China is that if they continue with their COVID policy, then it will be a problem going forward for the demand side.
So net, what is the sense on gold buying trends right now? Of course, back home the festive season kicks in, wedding season will follow that as well. Uh, at current levels, do you think traders, investors, or even end users should buy gold, or should they wait for some more possible cool off that could be on the cards?
Uh, some cool off can happen, but if you look at other, other diverse, other asset classes like equities and other, they always keep an SIP there. So why not do an SIP
Yeah,
here as well? I mean, you can do SIP in ETF. ETF is one of the great ways to invest in gold and not feel that much amount of cash going out of your pocket. So you should keep investing. You should diversify and keep investing in other liquid class, like the liquid assets, like the ETF side of things, where you
hmm.
can invest in one lot or two lots maybe, where you don't pinch that, feel the pinch in your pocket. So
Yeah.
you should always invest in gold. And yes, from a futures or cash perspective, some cool off is possible. But market and investors can look to buy at, as I mentioned, 51,300, 50,800 are great levels to buy if the Fed continues to remain data dependent, and their hikes remains data dependent going forward in the coming 6 months.
Yeah. Okay, point noted, Sriram. Many thanks for once again joining us and helping us understand what's happening in gold prices and whether investors, traders, and end users can dip in at the current levels. With that, it's a wrap, guys. Thank you for tuning in.
Thank you
We'll
for
be
having
back
me.
on
Take
Monday
care.
with the fresh updates on commodities. Thank you.